Hi guys, a very good afternoon to all of y'all. Today we'll be looking at one of the most important standards, which is your IAS 38 intangible asset. This has been previously tested in your foundation. This is being tested in your financial reporting, and also this will be tested in your SBR, which is your professional levels. Okay. So in terms of this weightage, this can be tested in your section A, section B, or it can be tested as a adjustment in your company accounts. Okay. Okay. Since most of you all have learned this through your previous qualification or your foundation levels, this session would be a recap of what we have learned so far. Okay, so without wasting our time, let us start. In terms of its definition, right? Number one is intangible assets, right? Intangible assets does not have any physical existence. What do I mean by no physical existence is you cannot touch it, neither you can feel it. Okay. Say for an example, this is a calculator, right? Which is a physical product. Can you see? I can touch it, I can feel it. But in terms of intangible asset, I cannot touch, neither feel. Okay. Number two, this is a non-monetary asset. What do I mean by non-monetary asset is these cannot be easily converted into cash. Okay. It will take a longer period of time to convert or generate cash. The reason being is the reason being is because there is no market value. There is no market value. Okay. Because the reason why they don't have market value is because they are not frequently traded. Right. In terms of intangible assets, they are not frequently traded. Once in a while, people will be trading. Now, these kind of stuffs, my calculator, all of these are tangible assets and they are frequently traded. Right. So therefore, they will have a regular market value. But in terms of intangible asset, you will not have market value. So therefore, it is non-monetary asset. Okay. Finally, finally, separately identifiable. Okay. What do I mean by separately identifiable means normally when I'm presenting my financial statements, I will categorize my assets into two parts. Do you all remember non-current assets, current assets? Okay. Same thing applies for your IAS 38 intangible assets also. You will categorize tangible assets separately as well as you will categorize intangible assets separately, right? So that is why I'm telling you this is separately identifiable. This is separately identifiable. You can separately recognize them, right? From your total assets, from your total company assets, you can show tangible assets and you can show intangible assets under your non-current asset and current asset part. Okay. Okay. Now, those are the three factors that you all need to identify in order to determine whether the asset falls under intangible asset. Okay. So now those are the three factors. In addition to that, it must meet the asset definition as well. Okay, it must meet the asset definition as well. Obviously, right? Look at this. The standard says it is an intangible asset, right? So first of all, you need to make sure it meets the asset criteria, and then only it meets your intangible criteria, which we looked here, which we looked here. Okay. So in terms of assets, this is nothing new for you all. Nothing new. Assets are always controlled by the entity, controlled by the business, right? This has arose due to your past transactions and events. That is your definition of asset, right? Because of that, you will be getting future economic benefits, right? So this is the definition of your asset. This is nothing new we have learned. Okay. And also something new, which is your cost of this asset, whether it's intangible asset or tangible asset, must be reliably measured, right? You should be able to reliably measure. Okay. Now, for an example, again taking my calculator itself, I can reliably measure and tell that this calculator, the cost would be 1,350 rupees, right? So I'm able to reliably measure based on its features and functions. Same thing applies for your intangible assets cost also. Okay. Now let us move into one of the examples. Let us move into one of these examples. Now, in terms of intangible assets, there are several examples of intangible assets. They could be your software, they could be your patents, they can be your copyrights, they can be trademarks, brand, what so, what not. Okay. For an example, let us take our software itself, which we are always familiarized with. Do you all think, can you all touch the software? Can you all touch it? Like it is inbuilt into your computer, right? Do you all feel its physical existence? No, you all cannot. Number two, can your software be easily converted into cash? That is also not, right? Because just because you go and give a software, no one's going to in return hand over you the cash, right? It's a lengthy process because why? You cannot touch or feel. It takes long time for people to generate cash using your software. Okay. But yes, you will generate cash, but it will take a longer period of time. Okay. So the conversion process of software would take a longer period of time. Okay. Number three, can it be separately identifiable from company assets? Yes. If it's a software, we'll be showing it under our intangible assets in terms of our assets. Okay. Okay. Now, these were the examples that I've given you. Now, in terms of goodwill, I want you to give a note. In terms of goodwill, see, goodwill is also considered as an intangible asset, right? Goodwill is also considered as an intangible asset, but goodwill's accounting is different, right? This is all I need to know for now. Okay, your goodwill will fall under intangible asset, right? But the accounting is in a different standard. Okay, that we will learn. That we will learn as soon as we go to that part. Okay. Now the reason I'm going quickly is because these are all your foundation you all have learned. So I'm just only giving you all the understanding. In terms of definition, definition, guys, don't worry. You all will not be tested. Okay. Just for the name's sake, just know. Don't memorize, just understand. What do you mean by research? What do I mean by research? Research is an investigation, right? To gain or identify new knowledge and understanding. Okay. So take Tesla as an example. Tesla as an example. Back in 2000s, did you all ever think that Tesla would come up with electric hybrid cars? No. BYD, which suddenly became unpopular. Did anyone think in 2000s back then they will have China will create one of the most fast moving electric cars? No. In terms of smartphones, in 1990s, did we ever think that we will shift towards smartphones? No, everything was analog, everything was keyboard, right? Okay. So in terms of development, it's the application of your research, right? Whatever you gained, any new knowledge and understanding in your research, those are applied. That is called as your development, right? So obviously, you using those knowledge, you will design a new product, right? You will design a new product and start to commercially produce or use. Okay, so whatever the research, whatever the knowledge that we gain through our research, that will be implemented, and that implementation is known as your development. Okay, so don't worry, just you all need to know it in any simple terms that you all feel is correct for you all. Okay, now coming into accounting. If it's research, guys, if it's research, always close your eyes and you all can directly expense it to your P&L, right? Since it is research, it is always an expense in your profit or loss. Okay. Now, we are going to recall something called as the pirate criteria. We are going to recall something called as the pirate criteria. Okay. Why? Because in terms of development, you all know research, there are in terms of intangible asset, you all can divide it into two. One part is research, one part is development. In terms of research, you all always directly, you all can expense it to your P&L. In terms of development, if all the pirate criteria is met, then you all can show it as an intangible asset, right? If at least one factor or condition is not met, then you all need to expense it in your profit or loss. This is the rule in terms of development. In summary, if it's your research expense, directly expense it to your profit or loss. If it's your development expenditure, you all can show it under your intangible asset if all the pirate criteria, again I'm repeating myself, all the pirate criteria has been met. If at least one of your pirate criteria is not met in your development stage, then you all need to expense it. Okay. So what do I mean by pirate criteria? Is here they are. What do I mean by pirate criteria? Here it is. Here it is. Probable economic benefits from your intangible assets will be generated. Obviously, right? If we have an asset, that asset needs to generate benefits. Okay. And if it's benefits, it has to be probable, right? Probable means any that event occurring, that benefit being generated is more than 50%. So there's a high chance that you will generate economic benefits. That is point number one, right? Point number two would be your intention to use or sell the intangible asset. See, normally when I buy an asset, say for this example, this calculator, I will either use this calculator in my studies or whatever I do, or I would sell it off to a third party. So that is my intention. Okay. Number three, reliably measure the cost of the intangible asset. As I told you previously, I know what is the cost to produce this calculator within my country. Okay, so I can measure the cost. Number four, adequate resources available to complete the project, right? So what do I mean by adequate resources means, obviously when I'm producing my calculator, I will need financial resources. I will need workers who fall under human resources. I will need intellectual resources, for example, like IT and all those stuff. Okay. So I need to have adequate resources for me to complete the project. So that is PIRA. Four factors in terms of your development, pirate criteria. Okay. T is your technological feasibility. Is your technological feasibility to complete the intangible asset. Okay, so what I mean by technological feasibility is number one, you all need to have you all need to have advanced technology to produce. Okay, and also you all need to have staff who have high-end skills, high-end knowledge, high-end applicational knowledge to complete or develop this project. Okay, so that is in terms of T. In terms of V, expected to generate profits. Okay, you all know what is profit, right? Income should be greater than the cost to produce that intangible asset. Normally, always we buy an asset. We as humans, we as businessmen, we like profits, right? So our expectation is to generate profits. Now, this is it in terms of PIRATE, pirate criteria, to identify whether do I capitalize or do I show it as my intangible asset or do I expense my development cost. Okay. Now let me put this in star. This area is a highly tested area in terms of MCQ or in terms of your company adjustment. right? This is always being tested. So be very well prepared in terms of IAS 38. Okay. So where will they test? This is one of the parts in terms of theory that they can test. Okay. And in terms of accounting, this is the other part that they could test. Okay. 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 Now we are moving towards our final part, which is our accounting for intangible assets. Okay. Regardless of whether it's an intangible asset or tangible, right? All the assets are initially measured at cost. Right? They are always initially measured at cost if it's an asset. Okay. Then, in terms of subsequent measurement, as soon as you all initially measure, you all need to do something called subsequent measure at each and every reporting date. Right? You all have two methods that you all can do. One is your cost model, and the other one is your revaluation model. Okay. Don't worry, in your exams, the examiner will mention which model you are supposed to use. If he does not, he will reterm or give you a paragraph in a way that you all are able to understand which model am I supposed to use. Okay. Okay. Now we look into cost model, and then later we shift to revaluation model of how accounting is to be done. Okay. So in terms of cost model, this is a commonly used method, right? Each and every time, commonly you will be using your cost model. How would you also accounting? It's simple, easy stuff. You all know. From your cost to minus accumulated amortization. It's the same way you all find carrying value for your tangible assets, right? And also, if you all have any impairment expenses, that also needs to be deducted. That also needs to be deducted. Okay, it's the same similar way of how you all find carrying value for tangible assets, right? That's the same way you all use for cost model also, except here and there the terms are different. Okay, now coming into something called as amortization. Coming to something called as amortization. Okay, amortization is also the same thing of your depreciation. Depreciation is done for tangible assets. If it's an intangible asset, you will amortize. If it's an intangible asset, you will amortize, right? Since amortization is an expense, you will be expensing it in your profit or loss, right? The same way of how you show depreciation, you will be amortizing and showing it under your expense if it's an intangible asset. Okay. Now, in terms of amortization, there are two methods or two subsections. One is your finite life. Finite life means you can easily determine its useful life. It can be 5 years, it can be 10, it can be 15, 8, 2 years. You all can easily determine the useful life, right? If it's easily been determined, then the accounting would be simply be cost minus your scrap value divided by useful life will give your amortization. This is all you all know, right? For an example, take your cost as 500,000 minus scrap is 0 divided by 50 useful life years. You will get an annual amortization of 10,000 rupees per year. This is what we know, right? This you all could do. Now, moving into something called as infinite life. Moving into something called as infinite life. What do I mean by infinite life is the useful life to calculate amortization cannot be determined, right? We do not know what would be the useful life because it is infinite. It is infinite, or I would say unlimited, right? So then if I cannot identify my useful life, then obviously I cannot calculate amortization. Why? Because to calculate amortization, I need to identify my useful life, right? So I cannot amortize. I cannot amortize. Then what do you all think I need to do? What do you all think I need to do in terms of infinite assets? In terms of infinite intangible assets, what do I do is I will be doing an annual impairment. So each reporting date, at each reporting date, I will be doing my impairment test, right? And charging impairment expense, right? Here it is. Here it is. This fellow. This fellow. If it's an infinite life, if it's an infinite life, we cannot calculate amortization. What we need to do is at each date or at each year end, we need to calculate impairment expense. Okay. Okay. Right. So amortization, in terms of amortization is the same thing as your depreciation, right? It's the same thing as your depreciation. The double entry would be is debit amortization expense and you credit your accumulated amortization, right? You credit your accumulated amortization, right? So you need to reduce your intangible asset. You need to reduce your intangible asset. That is the depreciation. That is the amortization when you all are doing intangible assets. Okay. Now, finally, we are moving towards our final part, which is your revaluation model, right? Which is a revaluation model. Don't worry, you can ask why I have not included any calculations. We have a separate recording in terms of our calculation. Okay. Okay. Now, revaluation model. We do not use this frequently. Okay. We do not use this frequently because if you all need to revalue an asset, it needs to have fair value, right? But in terms of revaluation model, it's in terms of intangible assets, it is very hard to find their fair value. Why? Because they do not have an active market. What do I mean by active market is, what do I mean by active market is this. Intangible assets are not frequently transacted, right? For an example, take this. This is my calculator. It's a tangible asset. Each and every time I always transact. Frequently, this is being bought or this is being sold. Okay. But in terms of intangible assets, they are not frequently bought or sold. Okay. That is why they do not have an active market or they do not have active fair value, right? And selling price is readily available for public. See, in terms of intangible asset, take goodwill, take your brand name, take your patents. Do you all think you all can directly find out what is the selling price? No, right? KFC's patent is different. McDonald's patent is different. Burger King's patent is different, right? Depending on their brand name, depending on the level of service, these intangible assets, which is your brands, will vary, right? So the selling price is not readily available for public in terms of your intangible assets. So that is why we do not use revaluation model in common. Okay. So you all can ask, how do I do the accounting? You all can ask, how do I do the accounting? It's quite simple. It's quite simple. What you all need to do is at each year, at each year end, right? You all need to check, is there any difference between your fair value and your carrying value, right? If there's a revaluation gain, if there's a revaluation gain, that revaluation gain will be taken to your other comprehensive income. Okay. If there's a revaluation gain, that will be taken to your other comprehensive income if you all are using revaluation model. Okay. That is also only if you are able to determine your fair value. Okay. So in simple, in terms of revaluation model, you all need to find out if there is any revaluation gain or loss. If there's a gain, take it to your other comprehensive income, right? This is done at each reporting date. At each reporting period, you will be doing it. How do you calculate revaluation gain? It is simple. You compare your book value, which is your carrying value, and you compare at the year end fair value or market value. If there is a gain, that is taken to your other comprehensive income. Okay. So as I was saying, if you are revaluing, if you are using the revaluation model, right, then you all need to revalue the entire class of assets and not only one specific asset. For an example, take that if you all are planning on revaluing your branch, then your software, your patents, all the remaining intangible assets needs to be revalued under your revaluation model. Okay, that is also one of the concepts. Okay, this was tested, I guess, in one of the MCQs, if I could remember, in your BPP. Okay, okay. Another one, the best part, in terms of amortization, right? In terms of amortization, you will only amortize when your commercial production begins, right? When you start producing in a bulk for a larger customer base, then only you start amortizing, right? Hopefully, I'll remember IAS 16 property, plant, and equipment. We started depreciating only when we use the asset, right? And in terms of IAS 38, intangible assets, we will only amortize when we start doing commercial or mass production. Okay. And you all may be asking, where do I record it? Where do I present it in my statement of financial position? It will be shown under your non-current assets as intangible assets. Okay. In terms of goodwill, in terms of goodwill, if this goodwill is purchased from an external party, you all know, right? When we buy more than 50% from a subsidiary, then obviously we need to calculate goodwill. Those will be shown separately. Those will be shown separately. Don't worry, don't worry. We have an entire slide allocated for goodwill, and when I come there, I'll explain to you. Right. So, in summary, what you all need to know is you all will be showing your non-current, you all will be showing your intangible assets under non-current assets. Right. Any purchase goodwill will be shown separately. And if you all are planning on amortizing the asset, that will only be begun when you all are doing commercial production.